All right, so now let's delve into those issues from the MPC decision yesterday, and we're doing that this morning with Dr. Anosi Ikemalo. He's the Managing Director of Optimum Global Capital. Dr. Ikemalo, good morning and welcome to the program.
Good morning. Thank you very much for having me.
So did the decision meet your expectation?
Yeah, a bit larger than I expected, but...
Oh, you're one of those who was expecting a 25 basis point cut.
I was.
Okay.
So I was slightly off on my prediction, but we're expecting a cut. I mean, largely symbolic, at least, to show that, okay, you know, they are thinking in this direction. So it did fall quite in line with that expectation. But the biggest surprise, you know, the 75% CRR.
Obviously. I think that was the most exciting part of the meeting yesterday. I don't know if anybody saw it coming.
Nah.
You know.
Yeah.
So you know, one conversation that's also going on following that is people are asking, can we really say that the MPC or the CBN is loosening its stance? Because if they say they are loosening and then we have a whole 75%, it doesn't really look like a loose, you know.
Yeah,
it still looks like a tightening stance.
Okay, so that's quite interesting. I've heard that from some corners, but if you actually look into the numbers, it's pretty interesting. At least at the last data we have on deposits, we have public sector deposits at like 1.8 trillion. This was as at December 2024, compared to the 9-point-something trillion in terms of deposits. So it is quite interesting because it's not the largest, you know, part of it, but the central bank has been alluding to a problem that they've seen, and the governor had said this in previous MPC meetings, that FAC allocations tend to affect the FX movement because of the liquidity that comes in. So I think this is more about FX than anything else, right? So as to sort of sap up that liquidity when FAC disbursements are done, because who are non-TSA? Non-TSA is really the state.
Okay, I think we do have a list of the non-TSA, but I mean, before we get that, I wanted to ask, so CRR is now at 45%, and then interest rate is now 27. Realistically outside, of course, it will be about 30% and all of that. Can we expect changes? The manufacturers and players in the real sector have been complaining, you know, about the high cost of fund and everything. Can we expect this to have, you know, an immediate impact, or do we still need to factor in that lag, or do we say that this 50 basis points is not large enough to really make an impact?
Yeah, so I think it's not just the 50 basis points, but also the corridor that changed.
Yeah.
Because it changed from plus 500 to plus 250. So technically before, the CBN was going to give out money at 27.5 plus 5, which is 32.5. Now they're saying they're going to give it out at 27 plus 2.5, that's 29.5. So that's a whole about 300, you know, basis points coming down. And so definitely this should have some impact in terms of borrowing costs. Now, not the largest, but definitely would have some impact. And like I said, the main thing here is the messaging, which is to say that rates are going to possibly continue to come down. So what's going to happen is that the banks are going to have to try to lend at higher rates. So you're going to see a bit of competition to sort of lock in rates. So you would see people already lending sub-MPR. I mean, that was already happening even when it was 27.5, particularly for the large and more prime borrowers anyway. So you are also going to begin to see that come down even further. So I think we will see that impact.
Yeah, but the other effect is for FDIs, Nigerian securities become less attractive.
Yes, the differential reduces, but the Fed has also cut rates. So
we're on the same.
Yeah, but
not completely.
Yeah, but you know, so, and I think this is also in anticipation of further rate cuts from the Fed as well. And so there would always still be a level of differential, but you need to bring down that borrowing cost. At the end of the day, it's quite significant. And we are in real positive rates now with inflation rate now at 20%.
All right, so let's talk about that non-TSA. So we have those affected. You talked about borrowing and the banks. So when I saw the list, everybody, first of all, of course, is NNPC. NNPC is going to be affected. You know, those who would have to follow this 75% CRR. And then you have banks like, for instance, okay, they said that the NNPCL was exempted because of its commercial and profit-oriented nature with its own accounts for joint ventures. And we know the issue of joint ventures and all of that in the oil sector is on. Now, Bank of Industry was exempted as a development finance institution that manages various intervention funds to allow them, to have, okay, we have it right here, to allow them have, the fund to borrow to small businesses, especially. Nexim Bank exempted because of its role as a commercial bank for export and import financing. We are trying to improve our exports, obviously. Then the railway exempted as a commercial entity that generates its own revenue. We have others apart from this. Okay, there you have it. The Federal Mortgage Bank. We've been talking about housing in Nigeria and how to make the Federal Mortgage Bank more effective. Now, if you have 75% of their funds tied down and they're not able to access it, I wonder how that will affect, funding for the housing sector, which you're already complaining we don't feel a whole lot of, Then you have the National Communications Satellite Limited. You have the Bank of Agriculture. So even though we are complaining of, we are not really feeling the impact of Bank of Agriculture, if they are captured in this CRR 75%, isn't that tying their hands even more, and all of that? So these are some of the concerns that have come out of this. So while it sounds really smart, that's the CBN or the MPC coming with the 75% CRR for the non-TSA, what about those like the Bank of Industry that are supposed to take care of small businesses, and all of that?
Yeah. Okay, so yeah, I think that's something that would be good to correct. The CRR debit is not a restriction of funds. It's a liquidity ratio. It's a sterilization of how much of that money the bank can lend out. That is the bank who holds those funds. What it is today it's 50%, well, reduced now to 45. So if you put your money in the bank, 1 million naira, tomorrow you can go and withdraw it at any point in time. But what CBN has said is that out of that 1 million, you must bring 450,000 to me. So only 550,000 can be used to lend out and all that kind of stuff. So it's really on the banks, not on the institutions themselves. They can always get their money. It doesn't sterilize their funds.
So like the Bank of Industry, the Bank of Agriculture, they have a fund of 100 million naira, for instance. Then help us to understand it from that.
So Bank of Industry has 100 million naira deposited in a deposit money bank, say First Bank, UBA, any of them. And that money is in their current account. What CBN is saying is that First Bank, if you have Bank of Industry's money, I'm going to debit you, and it's 100 million naira, I'm going to debit you 75 million naira to put in reserves. So you can only lend out 25 million out.
But it's the same thing we're saying.
Yes, but that's for the bank, not for the Bank of Industry.
But that means that the Bank of Industry cannot access the whole 100 million.
No, they can. It's just the same way you can always access your money in the bank. It's in your current account.
Now on the deposit
money bank that can't lend that money out, right?
Okay.
To their own customers. Because what's the business of the bank? It's it's lending, right? You're taking deposits. It's maturity transformation. You're taking money, short-term deposits, and lend it out long-term. So these CRR ratios are used to conserve some of that money so you don't lend out the whole thing, right? That's what it is. So it completely doesn't affect.
I wonder why I feel that it's still boiled down to how much access they will have.
So what it is that the banks now, before who scrambled for these public sector accounts because it could be cheap money, you could say, are no longer incentivized to do so, right? And, some of these people may be incentivized to, use the TSA or bank directly with the central bank, but it doesn't really change anything for them. It really changes for the banks themselves, right?
Okay, so that means the banks themselves will be running away from having that because you have money that you have to keep.
Yeah, exactly.
But this is Nigeria. Now, when the TSA was announced, we had the impression that every government agency and parastatal will be captured. I think at the point where some of these agencies were exempted, it wasn't really that much of a noise.
Yeah.
Okay. Except you were really close and intellectual and you're following the story. Is there a possibility of exemptions in this? I'm just saying so that we try and know what our expectations are. Are there possibilities that, yes, the CBN has said that every non-TSA should do the CRR of 75%. Are there possibilities of exemptions?
Yeah, so, I mean, I don't think there will be possibilities of exemption. My own interpretation of this is that it is primarily targeted towards fact disbursements to the state and local governments. Because these people, yes, these are commercial entities, but I think the real targets here are fact disbursements to states and local governments. When that money gets to the states, it's in bank accounts. So, and then they can do, so what they're saying is, if you have any money for a non-TSA thing, it will be sterilized so that that money can't be used. Because the CBN governor has said it before, that is one of the major problems that they're having.
Yeah, it was a big one he did in the last...
Exactly. So they are I think it's targeted more towards controlling liquidity that could possibly go into the FX market so that they can solidify the gains that they've made.
Okay, so out of curiosity, NNPCL, we know, is a very liquid, I think it's the most liquid and most interesting of all of them. But we know that there's been changes. In fact, I heard of some possibility of the Ministry of Finance taking charge of the all of those things.
The amendment.
Yeah. I think it's the PIA amendment. And I know the oil marketers, some of the unions are against it. Mm-hmm. Now, how does that play out with this 75 PN CRR, with the changes we're expecting from the PIA, which will most likely affect the running and operations of the NNPCL?
Yeah, I think, again, just going back to it, the NNPCL in this scenario, it has no effect on their operations. It's really on the people who with. That's where the effect is going to come. Because the banks, if you give a bank, 100 million or 100 billion in the case of maybe an NNPC, and before they only had to pack 45% of that yielding no interest, and then the rest could yield interest, that's interest income. Now that has increased by 25%. So that's lower interest income for the banks. So for NNPCL, when they come for their money, you have to give.
You give them their money. So do you see a possibility of maybe some banks running away from this non-TSA, or some of the agencies saying, don't worry, we're going to be part of TSA now? Do you see
Exactly. That's what I think is going to happen. So, the banks are not as incentivized anymore and so they can focus on the actual real sector.
Please don't bring your money here. We don't want to.
Well, no, yeah, we know. Maybe some of the branches in the National Assembly won't be as functional anymore.
Oh my God. Okay, anyway, we'll see. Thank you so much, Dr. Anosi Kimalu, Managing Director of Optimum Global Capital. Thank you for your views this morning.
Thank you so much.